afternoon, everyone. Welcome back to CA Intermediate Advanced Accounting. We are completing the topic what we started few days ago. In the last visit, we did chapter 11, unit 1, which is financial statements. The same chapter, there's another unit called cash flow statement, which was not touched. And we're going to do that unit today. Cash flow statement. This is common in another chapter. If you observe chapter 4, in chapter 4, unit 1 is also cash flow statement. In chapter 11, unit 2 is also cash flow statement. Shall we begin with cash flow statement? Look at the name, cash flow statement. So what is it? It is a statement. What does it have? Flow, in as well as out. Cash coming in and cash going out. Of what? Obviously cash. So it's a statement comprising of inflow and outflow of. Like, sir, then why should we do cash flow statement? A statement showing inflow and outflow of cash can be cash book also. When you prepare cash book, you don't write debit credit, you write receipt side, payment side. Receipt side you'll write all the money coming in, payment side will write all the money going out. Inflow, outflow of cash. Cash book is there. So is cash book, cash flow statement same? No. Cash book is what to say, baby version of cash flow statement. Cash flow statement is cash book presented with more details, more disclosures and more analysis. You might ask, sir, why do we prepare cash flow statement? Straightforward answer for the examination is very simple. Section 2, subsection 40 of Companies Act, which talks about definition of financial statement. In its definition, it includes the word cash flow. See that section 2, subsection 40 of Companies Act 2013 states that financial statements include balance sheet, statement of profit or loss. This balance sheet and statement of profit or loss, we're already done. We're already done with balance sheet and statement of profit or loss in our chapter 11. So now what are we trying to do? We're trying to learn cash flow statement, which is also part of the same definition. Which is also part of the same definition. So other than that, there is a couple of other things which are included in the financial statement definition. One is statement showing changes in equity, and the other one is any other explanatory note that is prepared. All of this together is called financial statements. This alone is what is our discussion right now in this chapter. Let's keep this standard aside for some time, AS-3 aside and chapter 11 unit 2 aside. Let's understand why do any entity need like to prepare cash flow statement. Keeping law aside, like law is asking us to do, but why is law asking us to do cash flow? Answer is pretty simple. The way to have control over business is to have control over cash. If you have control over cash in the business, you have control over business. If you don't have control over cash, you don't actually have control. Oh, let's say I start a business. Let's say I start a business of a cart in which I sell bhaji bonda. When I start this business, I push the cart, I cook the bhaji, I serve, I collect money, I wash the plate. So I am purchase manager who get vegetables. I am the production manager making bhaji. I am the sales manager. I sell goods. I am the APAR collecting money from my customer, and I am the human resource manager. I'm cleaning manager now. Cleaning plates also I don't do. Everything I only do. I only collect money. I only buy vegetables. I only chop vegetables. I only make bonda. I only sell. Customer relationship also I only do. Talking to customers and then collecting. Let's say the business starts doing well. Then what will I do? I'll appoint someone to collect the plate, wash the plate. If I want one more employee, I'll appoint one more guy to what? Cutting vegetables. But what will I do? I cook and I'll collect cash. If in case the business has to go further ahead, no, I'll shift from that small cart to one small shop. When I shift from that small cart to small shop, no, in that small shop also, other responsibilities I'll pick somebody else to take the order, somebody else to cut the vegetables, somebody else to wash the plate. Worst case, I'll appoint one cook also to make it. What will I do? I will sit and collect cash. And maybe I'll ask, sir, what do you want? And then collect cash, give token, say they'll collect food. If it becomes a bigger restaurant, then again, I'll arrange chair, table for everyone to sit, and there'll be a kitchen. I'll appoint 5-6 people to work. I'll appoint 3-4 people to wipe the table and take the food and everything. And I'll appoint someone to go to the market and get the food. But where will I sit? I'll sit at the cash counter where the cash is collected. So I want to have control over cash. If I have control over cash, I have control over business. Let's say now it's doing so well that I open multiple branches. One branch in Jainagara, one branch in Indira Nagara, one branch in Sheshatripura. One branch in Srirampura. I'm one branch in JP Nagar. I'm opening multiple branches. I can't be at 4 5 branches. So I'll appoint cashier at each branch. But let's say my head office is Jayanagara. I go to Sheshadipura branch and I go there. Whom do I meet? I won't meet cook. I won't meet the person who will wash the plate. I'll meet the cashier. I'll ask him what is the collection for the day. Let's say I don't go to JP Nagara branch today. If I call and talk to someone, whom will I call and talk to? I'll ask what is the sales today. He'll say, sir, 1,25,000. I'll say phone pay only 1,18,000 bandide. With cash alva. Say yes. I'll say balance cash deposit into my bank account. Or tomorrow first thing in the morning. Whatever sales happens today, you should write this much is sales. This much is UPI. This much is cash. UPI, I should check whether in my account I've got so much money. Whatever is cash, I will till tomorrow morning 10 o'clock. So much money should be deposited into my bank account. You'll send one office boy filling the challan. He will go to the bank, deposit so much money into my account. I'm having complete control about every branch what I have, even though I don't visit the branch, just because I have control over the cash. I can control the kitchen by having control over cash. What vegetable comes, you would have to pay money, no? Now let's say there's one more branch in Srirampura. Srirampura, my branch manager calls, sir, we'd have to make 10,000 rupees payment. I will ask, why? Can he make the payment himself? No, he has to ask me. Every rupee of sale, I want money. If he cannot pay it by himself, I'll ask, where is the money? Like, why do you want to pay? He'll say, sir, 10,000 rupees vegetables bill. I'll say, send me the bill. WhatsApp kalso. I'll open WhatsApp and I'll see the bill. And I'll see the vegetable. Is it right amount of quantity or not? Is it the vegetable that we use or not? Is the price extravagant or not? It cannot be too many kgs. It cannot be too high price. I'll check. Then I'll say, okay, I will make the payment. You generate the payment. OTP will come to me. Only when I give OTP, payment will be made. Otherwise, no. So, if in case you have control over cash in the entity, you have control over the entity. When you don't have control over the cash, you actually have no control over that entity. Did everyone understand what I'm trying to tell? Such significance is the significance of cash. For that cash, what are you doing? Cash book, cash account, where everything is in that one receipt side only. Food sold to customer is also there only. Asset sold is also there only. Commission received is also there. Interest income is also there. Debenture interest, everything is there in that only. That cash book, if I give it to you and ask you to make one decision based on that, you can't do anything. Cash is like the pulse of the human body, is like cash in the entity. No pulse, no business. You have profit, but you don't have cash. Organization will not survive. Cash management is one of the crucial decisions and crucial management discussions in any entity. CFO along with the finance manager and the entire finance team, every day, whenever they do some 1 hour, 1.5 hour meeting, in that must discuss point is cash management. How much cash do we need for this month? How much cash do we have? Do we have excess? Do we have shortage? If we have excess, then excess money will be given to treasury department. They will invest in some short-term investments. If there is shortage, we will tell them we would need this much. They will sell some investments and give us cash, or we'd have to borrow cash. We should know what payments are to be made today, tomorrow, day after tomorrow, this entire month. What day, what payments have to be made? What day, what receipts are there? Is there shortage? Is there surplus? Every day wise, we need to do that. This is what every company's finance manager has to do for 1 month in prior. Suddenly, someday, some payment cannot be made. We have to plan that budget. We have done cash budget also, no? You all do that. Such kind of budget has to be prepared. And based on that cash, you can take a lot of decisions in the entity. Whenever you take financing decisions in the company, investment decisions in the company, dividend decision in the company, it is not merely based on profitability, P ratio, beta, market condition. It is also based on the cash management in the company. Company's performance can be decided not just by profit. Let's say I bought something for 400 rupees. I sold it for 1000 rupees. How much profit did I make? 600. But this sale is credit sale. This sale is in my balance sheet asset side. I have debtors of 1000. I don't have cash of 1000. What if the debtor becomes bad debt? Then I won't receive 1000. No. Today you recorded 600 profit. Tomorrow you'll record 1000 loss. So profit is not a right metric for deciding certain things in an entity. So certain decisions are actually taken based on cash. How much cash do you have? Question. Where did you get cash from? What is the source of cash? What is the application of cash? Where is your cash coming? Where is your cash going? Follow the cash, will follow the business. Where is the company spending its cash? Company is spending cash on investing business, meaning like acquiring the assets. Then the company has growth perspective. Company is spending the cash in paying interest expense. Company is going to die very soon. Company is spending money in operations. They should have too many inflows also. If not, company is going to die. So looking at where the company's cash is going, where the company's cash is coming, we can tell. Let's say you have cash, good cash. But where did that cash come from? It came in the form of loan. Company is in big trouble. They're going to get into a debt trap. Company is getting lot of money by operations, sale of goods. Hey, very good. Company is getting money by sale of assets. Come on. You're selling assets and receiving money. One day all assets will die. You're using that, you will pay all your liabilities. So going concern is only damar. You getting what I'm trying to tell? Cash speaks a lot about a company. You understand? So cash flow statement is a very good metric to understand. Eventually we'll see practically also how cash flow statement is crucial. See, this cash flow statement is compulsory to be prepared by every entity except three. One person company need not prepare cash flow statement. Small company need not prepare cash flow statement. Dormant means sleeping company, company which is about to die. They also don't have to prepare. I think you read these definitions in your law. Here just the names are there. Do you have to know the limitations and everything? No, not required in accounts. Law, you still have to. You all understand? This is going to help us understand several things. Now, let's see some things. In cash flow statement, throughout we use the word cash, 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 cash. No, that cash is not the same cash as per Schedule 3 cash flow. Schedule 3 of balance sheet. The meaning is different. That is the reason I gave gap between that 11.1 and 11.2. These don't have to be done. These two topics, there is no need to be doing them together. This can be done apart, much different dates for both the topics. And whenever we say cash, what and all does cash include? Cash includes currency notes. You have note, you have coin, both are considered as cash. Other than that, if you have money in bank, that is also considered as cash. If you have money in bank, that is also considered as cash. Sir, but money in bank, isn't it cash equivalent? No, money in bank is cash provided it is demand deposit. Demand deposit means, how is it different from any other deposit? Whenever you keep any money with the bank, it can be two types of deposit. One, demand deposit. Two, time deposit. Demand deposit means whenever you want, you can demand and take that money. Time deposit means you cannot take the money whenever you want. You can take that money only after a certain period of time. For example, your RD, FD, recurring deposit, fixed deposit, those are time deposits. I make a fixed deposit for 3 years today by depositing 1 lakh. Can I take it tomorrow? No. You only told, no, what deposit is it? Time deposit. You can take it only after the end of that period. You kept money in your savings bank account. Can you withdraw it tomorrow? Yes. Why? It is demand deposit. It is demand deposit. You all understand? So cash includes cash on hand and demand deposit with. What is cash equivalent? See, when I have little cash, when I have 10 rupees, I'll keep in my pocket. When I have 10,000 rupees, I'll keep in my pocket. Beyond a point, no, cash is not safe to keep in the pocket. Why? Pocket will look very big. Then people will keep looking at pocket. Some person will bring blade also. Very scary, no? If they bring blade, why? Cut ಮಾಡ್ಬಿಟ್ಟು ತಗೊಂಡ್ಬಿಡ್ತಾರೆ. Pocket cut ಆಗುತ್ತೆ, ದುಡ್ಡು ಹೋಗುತ್ತೆ, ಭಯನೂ ಆಗುತ್ತೆ. Scary, no? So what to do? Don't keep too much cash in the pocket. You will keep it in the form which is equal to cash but not exactly cash. You will keep it in the form which is equal to cash but it is not actually cash. Equivalent to cash. Get it? What is cash equivalent? Something which is very equal to cash but not cash, which can be converted into cash like this, but it is actually not in the cash. But if you want, you can convert it into cash like this. You understand? If you have too much cash, you are called what? You have too much cash, you are called as what? You are a very, but you should not tell everyone that you are rich. The moment you tell everyone that you are rich, then the way they treat you is very different. So you are about to tell you are rich, but don't tell. The acronym to remember the definition of cash equivalent is RISH. You are about to tell rich, but then you realize that you are not a rich. So it is RISH. R-I-S-H. There are 4 conditions. R-I-S-H. If all the 4 conditions are ticked, it will become cash equivalent. Even if one out of 4 is not ticked, it will not be cash equivalent. R. Readily convertible. What is R? It can be readily convertible into cash. It is there, no? It is not cash, but it can be converted into cash. You want to convert now, you can convert it immediately. There is no one stopping. Readily market is available for you to convert. I. insignificant risk. Meaning, if you decide to convert it into cash, the value that is there on the paper is the value that you get in cash. The value that is there on the paper is the value that you get in cash. It's not like on the paper its value is different. When you convert it into cash, you got different. The value that is there on that paper is the value that you get when you convert it into cash. There is no risk. There is no risk. Now, can I call my watch as a cash equivalent? Yeah, I can sell it. There are a lot of people willing to buy. Yeah, it is readily convertible. There might be market, but there is significant risk. Let's say I bought watch for 10,000 rupees. I've recorded it at 10% depreciation per year. After 1 year, it's now recorded at 9,000 rupees in my balance sheet. Today, if I want to sell immediately, no one will pay 9,000. They'll say, I'll give you 3,000. Why? They know the urgency, know that I need money. You understand? Same with happened to shares also. Now, let's say I have some shares of a company. Can it be converted into cash? Yes, if it is listed. No, if it is not listed. The company is not listed. Where do I sell? I cannot sell. If it is listed, I can sell in the stock market. So if a company share is listed in the stock market, readily convertible. If it is not listed in the market, not readily convertible. So is an unlisted share cash equivalent? No. Is a listed share cash equivalent? Can be. Can be. 4 conditions. No. Can be. First one, readily convertible is satisfied. Second condition, insignificant risk. Shares are subject to risk. Right now the price of the share is 200. By the time I sell, it will come to 190 or it can come to 205. The price at which I have recorded it in my balance sheet and the price at which it can get sold in the market is not same. There is huge difference. There is risk involved. There is significant risk. There is a significant risk. Risk should be insignificant. Risk should be, what if I have shares? I don't have shares, but I have debentures of a company. Debentures of a listed company. It is listed. So readily convertible. Insignificant risk. Why? Debentures will be redeemed at par, no? By the company. Company has to redeem them. It cannot be irredeemable. So that is also fulfilled. But it still can be cash equivalent. It is not cash equivalent. Why? Next condition. RIS, short term. S is, sir, what length do we call as short term? 90 days. That is basically 3 months. If an investment is for a period 3 months or less, it is short term. It is more than 3 months, it is not short term. Meaning this debenture, what we told, is listed, readily convertible. Because it is debenture, there is insignificant risk. It is short term when these debentures are redeemable within 3 months. They are due for redemption within 3 months. Then short term. And lastly, H is highly liquid, meaning there should be n number of opportunities for us to sell it and then convert it into cash. If any investment is readily convertible, has insignificant risk, is short term and is highly liquid, then it is considered as cash equivalent. Then it is considered as, sir, then why are we discussing this cash equivalent? When we say cash flow statement, it is cash and cash equivalent flow statement. This cash and cash equivalent flow statement. Just to make you understand the context, let's say I took my cash, I deposited into bank, demand deposit. It is not cash flow. It is not cash flow. I withdrew cash from bank balance. It is not cash flow. I purchased investments which are short term, highly liquid, readily convertible and insignificant risk. It is not cash flow. I sold them and I converted into cash. No. Cash adu eradu same. Enu difference illa. There is no difference between cash and cash equivalent in cash flow statement. They are written together. When you prepare cash book, you write opening balance, closing balance, receipts, payments. Am I right? Let's say you deposited, you bought some investments. Here in the receipt side, you write balance brought down. Payments you write by investment. Am I right? In cash flow statement, it is not a payment only. That investment is also cash equivalent. So in the form of cash you had, now we have it in the form of cash equivalent. Both are part of the opening balance. You understand? Now let's do a small question on cash and cash equivalent before we go to cash flow. But I'll give you a little time to read what is cash and what is cash equivalent. Come on, read this. What is cash? Cash on hand and demand deposit with bank. Very good. What is cash equivalent? Short term, highly liquid investments that are readily convertible into known amounts of cash and which are subject to an insignificant risk of changes in value. I know you can't mug up the same definition and then write. If you remember the word RISH, remaining is of, but to, and the, is the, called to, cash equivalent, if you write it will be. But these four words, you have to use the exact same. Like in YouTube search and all this, keyword and all, like this is the keyword. Write these four keywords, of it you write whatever. Lead you to the same. Got it? Come on, let's do a question. Ready? AQ1. AQ1. Everybody's with me? I want you to segregate these items given into cash, cash equivalent, neither, as per accounting standard 3. Hey, what I thought you now know, cash and cash equivalent definition. That is as per accounting standard 3. Cash and cash equivalent as per accounting standard 3 is different from cash and cash equivalent as per schedule 3. They're not same. Start, yeah. Cash in hand. ಕೈಯಲ್ಲಿ ಕಾಸು. Cash. ಇದ್ದೋನೆ ಬಾಸ್. Bank balance in savings bank account. Is cash. It is not cash equivalent. It is cash. How about debit balance in current account? Current account is an account where you can overdraw. Got the option, like you can have zero balance also. Yeah, businessman's account basically is what we say. So what is it? It is cash or cash equivalent. Yeah, demand deposit. You can deposit money there and you can withdraw any day. Understood? What if you have credit balance in current account? You have overdrawn. Negative balance. Cash cannot be negative. Cash cannot be negative. It is neither. It is borrowing. It is borrowing. But if it is part of your regular cash management, it can be considered as cash. But we'll call it as borrowing. We'll write it as a borrowing transaction. Specifically, we'll read in financing activity. What is it? I'll teach it. You're going step by step. I won't teach this to you keeping in mind that I have taught this before. Teach as if I am teaching. Because you are learning it first. Come to next one. Overdraft in bank account. That is not cash. That is actually borrowing. Take it as financing. I'll teach later. Balance in recurring deposit. RD. Time deposit. It is not cash. Is it cash? It is not cash. Can I consider it cash equivalent? Yes. Can. I'm not telling will. Can. But it should be RISH. R okay. I okay. H okay. Yes not okay. Yes is short term. Short term means how many months? 3 months. 90 months. 3 months. Or 90 days. What I told. Yeah, I asked how many months. Like sir 90. How many days? 3. So it is 90 days. Basically 3 months. So how many months is it here? Well, I am teaching. Like, hey, आपको इतना भी पता नहीं. मुझे पता है. पढ़ा रहा हूँ यार. Come on, yeah. Is this cash equivalent? No, it is not. What if you have FD for 24 months? Too long, bro, too long. This is not cash equivalent. What if you have FD for 3 months? Okay, I am listening. 3 months is cash equivalent. How about you have short-term sovereign debt instrument? Sovereign debt instrument means you gave loan to government of India. You gave, they're standing outside and then seeing, God, bye. You would go back home. If not, they're continuously staying. You have debt, yeah. Debt to. You have given debt to government. Government has taken money from you to run the country. So what is it? Yeah, that's cash equivalent. Why? Usually it is, they've told the word short term. It is investment. Sir, doubt to sir, government will. Hey, don't tell that you doubt the government. If you doubt the government, then whom else will you trust in? Yeah. Okay, this is cash equivalent. Maybe last day of class. You shout every day. Did anyone come and ask why were you shouting? You will tell no, that one guy is there. He doesn't leave the class before. Tell foreign exchange bank balance. You have money in foreign country bank account. Like you have in dollars, pounds, dirhams, baht, yen. What is it? It is not cash. It is cash equivalent. Can be converted into cash immediately. Stock exchange is there, no? Like that, foreign exchange is also there. You can sell it like this. Readily convertible. Whatever is the trade, same rate you can sell. Insignificant risk. Because cash items are recorded in the closing rate, AS-11. So you would have recorded the same rate. Market also same rate. So you can convert it at the same rate. Short term, highly liquid, readily convertible, insignificant risk is cash equivalent. Remember, Indian rupees is cash. Other than Indian rupees is not cash, but it is cash equivalent. It is equal to cash. Next one. What about you having investment in shares and debentures? Shares and debentures, equity shares is not cash. Why? There is risk involved. There is risk involved. What if you have preference shares for redemption within a month? See, it is investment, readily convertible, insignificant risk, short term. Why they've told in a month, and highly liquid. So this will be considered as cash. This will be considered as. What if debentures are there of an unlisted company? If it is not listed, it is not readily convertible, then it is not cash equivalent. What if you have invested in debentures of a company which are due for redemption within 2 months and that company is actually listed? Then it is cash equivalent. Did you all understand that what is cash equivalent, what is cash, when is it neither? Everyone, have a look and ask me if you have any doubt. One doubt, sir. What time will you leave the class? I will answer it later. I was taking May 26 batch. I left that batch and I walked down the stairs there. Every day when I walked down, you people were sitting quietly and then listening. I saw someday you both were using phone, but don't look back. Someday. Someday, no sir, leave, it's okay. Not today. Good girl today. After her birthday, you become good. Okay. Any doubt here? Then read Nenapirali. What does it say? Conditions to call an investment as cash equivalent is RISH, R, readily convertible, meaning there is a willing buyer. Insignificant risk, meaning saleable almost at same value. S, short term, meaning 3 months or less. H, highly liquid, meaning it is either redeemable or it is listed. Everybody got this? Now let's understand the story of why do we prepare cash flow statement. Very easy. Whenever I start a business, how do I start my business? First, I get one idea. Hey, how about this? I get one idea. After I get that idea, what do I do with that idea? Now I want to execute that idea. I will ask people for money. Do you have 10 lakh rupees? Can you contribute 10 lakh rupees? I will start business. And I will no answer. Some people will say, she's like, okay, sir, take 10 lakh. I believe in myself and I believe in your business idea. He'll give 10 lakh rupees. I'll put 20 lakhs from my pocket. 20 lakhs I contributed capital. He gave 10 lakh rupees loan together. I've arranged money. How much? 30 lakhs. With this, I will start business. First, I arrange finance, money, whatever is needed. That is financing activity. After that, using that, what will I do? Now I'll buy the equipment that is needed. I buy a building. I'll buy the furniture. I'll buy the equipment, machinery, plant, all of these things, motorbike, everything. That is investing activity. After that, finally I start business. Selling the goods, buying the goods, selling the goods, buying the goods, paying expenses, paying rent, all of that is operating activity. I'll repeat. I invested capital, financing activity. I borrowed loan, financing activity. Using that, I bought assets, investing activity. I bought raw material, operating activity. I paid rent, operating activity. I paid salary, operating activity. I sold goods and collected money from customers, operating activity. Using that money, I paid interest on loan, financing activity. Understood? I repaid my debenture holders, redemption of debentures, financing activity. I paid dividend to preference shareholders, financing activity. I paid dividend to equity shareholders, financing activity. I bought back equity shares, financing activity. I redeemed preference shares, financing activity. I repaid loan, financing activity. That's what asset has become old. I will sell asset, investing activity. Using that money, I will buy one more asset, investing activity. Now I want to buy one more asset. I don't have money. I issue shares, financing activity. Using that money, I buy an asset, investing activity. I issue shares, financing activity. Using that money, I pay salary, operating activity. I collect money from my debtor, operating activity. I pay money to my creditor, operating activity. Are you guys getting it? That's it. Cash book, whatever you prepare. You write balance brought down, balance carried on, receipt, payment. I don't like it. I'll take on Ninja Sword. Like, I'll cut it into three parts. First part, financing. Second part, investing. Third part, operating. You are writing all the receipts, all the payments together. No. That joint family has now become small family. That small family, I'll write financing inflows, financing outflows, financing net flows. Investing inflow, investing outflow, investing net. Operating inflow, operating outflow, operating net flow. Total net flow, opening, close. That's it. Same cash flow statement presented slightly differently. Nothing but same cash book presented slightly differently is nothing but cash flow statement. I want you to read what do you mean by cash flow. Inflow or outflow. Inflow, receipt, outflow, payment of cash or cashing. Next, operating activities means what? Operating, oh no. So that oh, whenever I see, to me it looks like Udinode. So I have kept Udinode symbol. Yeah. Picture memory. Read, what is it? Principal revenue producing activities of the enterprise and activities that are not investing and financing. To be operating, you should not be investing and financing. Only then you can become operating. Then you should be principal revenue producing activities of the enterprise. Did everyone understand? Read, yeah, what is operating activities? Principal revenue generating activities of the entity which are other than investing and financing activities. Read the next one, investing activities. What is investing activities? Acquisition and disposal of long-term assets. I told you, you purchase an asset, investing activity. To sell an asset, invest. What is financing activity? Raising the money or repaying the money or paying interest against it or paying dividend. It can be issue of shares, issue of debentures, payment of preference dividend, payment of equity dividend, payment of debenture interest, redemption of debentures, redemption of preference shares, buyback of equity shares, everything is financing. Please read what is financing activity. Activities that result in changes in the size and composition of the owner's capital and borrowings of the enterprise. Now let's play a small game. In this game, I'll give you a bunch of transactions. You should categorize them into operating, investing, finance. I've mixed them all up, okay? Like rice, wheat, ragi. I've mixed it. What should you do? Should do separation. ಹಿಂಗೆ ಮಖಕ್ಕಲ್ಲಮ್ಮ ಹೀಗೆ ಮರದಲ್ಲಿ ಹಾಕ್ಬಿಟ್ಟು ಹಿಂಗೆ ಮಾಡ್ತೀರಲ್ಲ ಡೋಂಟ್ ನೋ ಅದೆಲ್ಲ ಗೊತ್ತಿಲ್ಲ ಸರ್. ವಿಲ್ ಆರ್ಡರ್ ಇನ್ FTH ರೆಡಿ ಬರುತ್ತೆ. ನವಡೇಸ್ Zepto FTH when you order ಆನಿಯನ್ ಕ್ಯಾರೆಟ್ ಎಲ್ಲ ಕಟ್ ಮಾಡಿರೋದು ಬರುತ್ತೆ. ಯಾ if you select onion sambar, whatever ingredients are needed for onion sambar, chopped vegetables, everything will come. You open that packet, put it all together and then turn on the stove. Ready sambar. ಬಿಸಿ ಬಿಸಿ ಸಾಂಬಾರ್ ಸವಿಯಲು ಶುದ್ಧ. Issue of equity shares, operating, investing, financing. Operating, investing, financing. Issue of bonus shares. It is not cash flow. Bonus shares means free. Foundation copy ಮಾಡಿ ಪಾಸ್ ಮಾಡಿದಂತೆ. Bonus shares is free shares given, no cost collected, no cost collected, no cost flow. It is capitalization of reserves. You take it from reserves, you put it into capital. Yeah, like this. So there is no cash involved. How about issue of right shares? It is issue of right shares is issue of shares for cash, but yeah, slightly lesser than normal price. But still it is issue of shares for cash. Operating, investing, financing. Sir, what about left issue? Left to right angala. Right issue is issue of shares to existing shareholders. Then top issue, bottom issue, middle issue. Right issue is issue of shares to existing shareholders at a price lesser than the market price. Come to the next one. Purchase of tangible assets. Investing activities. Sir, tangible assets means assets which you can touch, see and feel. Intangible, ದೂರದಿಂದನೇ. I mean to say, you can only feel the asset. You cannot touch goodwill, patent, know-how, adu. Okay. How about purchase of intangible asset? That is also investing only. Yeah, but it's just that it does not have physical existence. How about depreciation on tangible assets? Not not cash flow. Have you ever written the entry depreciation account debit to cash? You're using this machine for 3 months, 3 years. Adike first, ayyo papa, you are working for, take depreciation 10,000. Will you pay cash to the machine depreciation? No. Depreciation is non-cash expenditure. It is not cash flow at all. You look at depreciation and then say, Nino, cash flow ne Allah. What about next one? Amortization of intangible asset. Like how you depreciate tangible asset, you amortize intangible asset. Same thing, but it is on a different asset. In not a cash flow. Not a cash flow. How about asset purchased by issue of shares? There's one guy who has asset and you have shares. You are looking at his asset. He's looking at your shares. You like shares beka? He says yes. You will tell nang asset beku. Like okay, done. You take my shares, you give me your asset. So you gave shares of your company. You did not collect cash from them. Instead you collected shares. Sorry, instead you collected asset. Issue of shares for non-cash consideration. Operating, investing, financing. Not a cash flow. There is no cash. Did you receive cash? No. You received asset. You received furniture, land, building, plant, machinery, everything. You understood? Hell yeah. No, you guys are not telling. Very good. Yeah, then purchase of investments. Investing activity. Interest received on investments. Investing activity. That investments fetched you some interest or dividend. That is investing activity. You sold investments. Investing activity. Investing. Purchase of investments. Sale of investments. Interest on investments. Dividend on investments. Everything is investing activity. Have any doubt? Depends. Have I told you that your business is investing business? Then it will become operating. That here Suyash Sir has thought what you would have thought. Non-financial enterprise. Business is not this. Then it is financial enterprise. Will come there. Dividend received is investing usually, but sometimes it can become operating when my business itself is investing. We'll come there late. You are now confusing the entire class. See, our business is some other product. Our business is not money. Money is part of my business. Business is not about money. I have some product to sell. Then purchase of investments, sale of investments, everything is investing activity. Hey, remember, first line is operating, second line is investing, third line is financing. Because when I scroll down, you will not be able to see it now. Help me, sale of goods, operating. Purchase of goods, manufacturing expenses paid, operating. Administration and selling overhead paid. Sir, it is not part of the cost. We are not doing AS-10, AS-2. This is cash flow, operating. Payment to creditors. Payment to, here a little bit of glare, you can't see the face. Okay, payment to creditors, operating. Payment to receipt from debtors, operating. Tax paid on business income, operating. Tax paid on business income. ಏನು ಕರೆಕ್ಟಾಗಿ ಹೇಳ್ತಾ ಇದ್ದೀನಿ ತಾನೆ, ಮತ್ತೆ ಬೈಯೋದು ಯಾಕೆ? ಯಾರು ನಿಮ್ಮ ಕ್ಲಾಸ್ ಅಲ್ಲ. ಒನ್ ಗೈ ವಾಸ್ ಆಬ್ಸೆಂಟ್. ಕೇಳಿದ್ರೆ ಹಿಂದೆಗಡೆಯಿಂದ ಏನಕ್ಕಪ್ಪ ಬಂದಿಲ್ಲ ನಿನ್ನೆ ಕ್ಲಾಸಿಗೆ ಅಂತ ಕೇಳಿದ್ರೆ, ಸರ್ ಕೌಡೆ ಅಂತ ಹೇಳ್ತವನು ಅಲ್ಲಿಂದ. ಯಾವುದೋ ಅದೇನೋ ಕೌಡೆ ಇತ್ತು ಅದಕ್ಕೆ ಬಂದಿಲ್ಲ ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಹೇಳಿದೆ. ನನಗೆ ಭಯ ಆಯ್ತು, ಇವನು ಏನಕ್ಕೆ ಬೈತವನೆ ಸರ್. ಸ್ವಲ್ಪ ಸರ್ ಇಲ್ವೇ ಇಲ್ಲ. ಏನೋ ಸಮ್ ಹಬ್ಬ ಇತ್ತಾ? ಅವ್ನು ಹಂಗಿಂದ ಹೇಳಿದ ಹಂಗೆ ಕೇಳಿಸ್ತಾನೆ. ಸರ್ ಬಂದಿಲ್ಲ ಅಂದ್ರೆ ಪರವಾಗಿಲ್ಲ, ಹಿಂಗೆಲ್ಲ ಹೇಳ್ಬೇಡಿ, ಅದು ಎಲ್ಲಾರ ಮುಂದೆ. ಕೇಳಿಪಾ ಪ್ಲೀಸ್ ಎವ್ರಿ ಒನ್. So tax paid on business income is operating activity. Okay. Tax paid on capital gain arising from sale of investments. Little dt over. Not faculty. I'm not asking about faculty. From your end. Sometimes from faculty's end full will be over. From your end starting also would be not over. From your end little over. A capital gain. When you sell a capital asset and you get more than the cost of acquisition, that excess that you received is LTCG, STCG. You pay that, no? Is it operating, investing, financing? investing. Why? Why do you pay that? It is on sale of asset, not goods. So that is investing. This is investing. What if you get refund of income tax from government? Why? Because you paid more money. Government is like, hey, you paid extra. Take your money. Your money you only keep. I don't want your money. Kandor kasu nange ake ante return kottru. Got it? So where do we keep that money? It is operating. Sir, why do we pay extra? Maybe excess TDS, or you paid more advance tax. When you paid excess TDS or excess advance tax, later when the tax payable will become lesser than the tax already paid, 26 AS when you download and then put that excess money, you would get back. That is refund of income tax operating activity. Okay. Come to the next one. Interest on refund of income tax. Sir, interest means you paid extra. Government took time to give the refund. So they'll give you with interest. Don't expect too much interest. That will be operating, investing, financing. It is actually considered as investing. Why? You have given extra money to the government. No, it is like an investment that you made in the government. Oh, I am sorry to say, remember this. When you get interest, it is considered as an investing activity. Interest is always considered as an investing activity. Interest is never operating. You know when is interest operating? When your business itself is lending and borrowing. You are not manufacturing any product. You are not trading any product. What is your business? Take money at 3% interest. Give it at 4% interest. So your business is only money. You don't want money for business. Money is your business. Then interest will become operating. Otherwise, interest paid will be financing. Interest received will be investing. I want you to all to listen. Interest paid is financing. Interest received is investing. You pay interest because you have borrowed money. When you borrow money, it is financing activity. On that interest paid will be financing. When you have invested money in investments, you receive interest income. When you have invested money in investments, you receive interest income. Interest income received will be always investing activity. Interest income received will be always, unless until our business itself is money. I am not manufacturing any product. I am not selling any product. I borrow money at lower rate. Give it to somebody as loan at higher rate. Borrowing, lending, financing, financier. Okay, 3-4 chain I will put here. Till here to here, full gold. 5 chains here, this big. No 1 gram gold, full. And then like rings here like this, that my hand cannot be folded like this. So what am I? Financier. Anna. So my business is, you have money, you give 3% interest, I'll give. You want money, take, give me 5% interest. That's my business. Then that is not Upendra, ya. Rakesh. So in that case, interest paid and interest received, both will become operating. Otherwise, interest paid is always financing, interest received is always investing. Got it? We'll discuss that in the later case. Come to the next one, interest on income tax. You paid the income tax late. You paid the income tax late. It will become financing. It will become financing. Interest paid is always financing. Interest paid is always financing. Interest received is always. What if you pay interest on GST? GST money you collected from your customer. You should pay to government, no, within next month. You did not pay. You used it for your working capital management. You paid it late. GST department will say that is my money. Adalido, you used my money. You used my money for your business. So I want you to pay me the GST money, what you collected in my name with interest. GST money, what you pay, you are collecting and paying. Interest, what you pay, is financing activity. You understand this? Come on, help me with the next one. Sale of assets. Investing. Interest paid to debentures. Financing. Dividend paid to dividend paid to shareholders. Doesn't matter, preference shares or equity shares. Redemption of debentures. Financing. Redemption of preference shares. Conversion of debentures to shares. It is not cash flow. They had debenture, now you take their debenture and then give them share. How about conversion of preference shares to equity share? Not cash flow. What about buyback of equity shares? Financing. Understood? Have a look at this, read it, also write if you have not written. If you have any doubt, please ask. Please ask if you have any doubt. Bariri. Throughout, no, we spoke about an entity which is not in silence. Throughout, we spoke about an entity which is not in the business of financing. It is a non-financial enterprise. I am a manufacturing entity or I am a trading entity. I either manufacture a product and sell, or I am buying goods and selling goods. So I am not in the business of money. In that case, interest paid on debentures is financing activity. Interest paid on bank overdraft is financing activity. Interest received on equity shares. What activity? Interest received is investing. Sir, pre-acquisition, still investing. Sir, post-acquisition, still investing. Sir, but I somehow remember somewhere in AS-13 you are telling something about pre-acquisition, post-acquisition. If it is pre-acquisition dividend received, it was adjusted from the cost of the asset. If it was post-acquisition dividend received, it was written in the dividend column. So I'm talking about the credit aspect there. Whether should it go to P&L account credit side or it should reduce the cost of the asset. Here we are talking about the debit aspect. Debit aspect, that bank balance debit is there. No, it is investing, whether it is pre or it is post. Credit aspect will be, pre aspect will be deducted from the value of or cost of investment. Post aspect will be taken to P&L. Hope you remember AS-13. We repeated it when we did AS-21. Very nice. Come on. Dividend received on preference shares, investing activity. Dividend paid on equity share capital, financing. Dividend paid on preference share capital. Remember, dividend paid is financing. Interest paid is financing. Interest received, investing. Dividend received, investing. I'll repeat. Interest and dividend received, investing activity. Interest and dividend paid. Everyone understood? This is a non-financial enterprise. An enterprise which is not in the business of lending and borrowing. What if the same entity is in the business of borrowing and lending? Then your answer would change. Then your answer would change. Interest paid on debentures will be operating. Interest paid on bank overdraft will be, sir, why not financing? My business itself is finance. Okay. How about dividend received on investment of equity shares? Operating. Why? I borrowed money. I'm lending the money to company in the form of capital. So there is nothing called investment. Investment is my business. Understood? How about dividend received on investment in preference shares? Operating. Dividend paid on equity share capital. This will be finance. Remember one important point. Dividend paid will always be finance. Dividend paid will always be financing. Whether you are a financial enterprise or you are not a financial enterprise, dividend paid will always be understood. I have given this in the form of a note here, Nenapirli, so that see this dividend paid financing. Whether you are in financing business or non-financing, dividend received is usually investing. If you are a non-financial enterprise. If you are a financial enterprise, then you take it as operating. 99% of the times, whenever you get question in the exam, it's always a non-financial. Unless until they specifically mention that it is a finance. It's a rare possibility, but can be. So you should. Come on, see this quickly copy. You're done. Let's go to AQ4. You all want to say SAR once? Do it. SAR. Once more or ashte? Once more. Done. ಬೇಜಾರಾಗ್ತಿದ್ಯಾ? ಬೇಜಾರು ಮಾಡ್ಕೊಳ್ಳಿ. Come to AQ4. I can't help. Interest received is usually investing activity. Interest paid is usually financing activity. If your business itself of money, interest received, interest paid, both are operating. Dividend received is investing. Dividend paid is financing. If you are a financial enterprise, dividend paid will remain financing. Dividend received, instead of investing, it will become operating. Did I answer? Very good. Now, in this question, they have given us one cash flow statement. Sorry, they have given one cash book. What have they given? What should we prepare? Cash flow statement. They have given one cash book. Shall we prepare one cash flow statement? Very simple. Yeah. Take your ninja sword and like cut it into 3 parts. Shall we begin? First one, opening balance of cash and cash equivalent is how much? 1 lakh. So this is my cash flow statement. I'll write all bodies at one place, all danger items at one place, all F at one place, financing activity. So at the end I'll write opening, close. How much is opening? Opening is 1 lakh. So 1 lakh I will write here as opening cash and cash equivalent. Done. Come to the items here. First one, cash sales. What is it? Operating. Cash sales is, should I put what next to this or not needed? I'll write cash sales in operating activities here. Receipt from cash sales 1 lakh. Easy. Come back. After cash sales, next item, trade receivables. How much is trade receivables? 1,75,000. Is a customer to whom you have sold goods in the past. That day he did not pay money. Today is paying money. Collection from trade receivables. Operating, investing, financing. Operating. I would write in my operating activities, receipt from trade receivables 1,500,000. Everybody got this? Back. After this, trade commission received. You received commission 50,000. Where do we write it? Operating. Pakka. Come to operating activities, we'll write trade commission received 50,000. See, after this trade commission received 50,000, sale of investments 30. You sold investments. What is it? Investing. Where do I write? Investing. Whatever is on the receipt side is all positives. Payment side will be all negative. I will write this in the investing. I will write sale of investment 30. Can we go to next item? What's after sale of investment? Loan from bank. When you take loan from bank, it is financing activity. Where will I write? Financing activity. Inflow 1 lakh. Observe, financing activities. I'll write loan from bank 1 lakh. Easy. What's after loan from bank? Interest and dividend 1,000. When you receive interest, when you receive dividend, is investing activity. So how do you know it is received? Receipt side is there. Is not what is in. Shall we write in investing activity? 1,000. Investing activity. Right? Interest and dividend. Got it? Then anything else here? No. Receipt side is over. What to do? Shall we go to payment side? First payment, cash purchase. Sir, why do we purchase cash? Not purchased cash, we purchased goods and we made the payment in cash. Oh, okay. 1,20,000. Operating activity nalli cash purchase. 1,20,000. Correct agi vade anta helodu. Idennella kelidre. Next, the trade payable. Andre these activities are all considered as operating. Trade payables. You have paid money to your supplier, supplied goods to you. 1,57,000. Operating outflow, yeah, this should be written as minus. Payment to trade payable. 1,50,000. After that, selling expenses 75. To sell goods, you have incurred some expense. How much? 75. It is also operating. Outflow minus 75 in operating activity. Done. What's after selling expense? Income tax paid 30,000. What is this? Operating activity minus 10. Everyone got this? What's after this minus 30? Investment 25. You have purchased investments by making payment of 25. Investing, outflow, inflow. Sir, but investment is purchased. Yeah, that's the reason cash outflow. Cash outflow other than investment inflow. Decrease in cash as an asset is leading to increase in investment as an asset. After purchase of investments, repayment of loan 75,000. Financing activity. Outflow, inflow. Outflow. I would write in financing activity repayment of loan. That's not where we will stop. We have one more, interest on loan. So when we give them their money back, they will ask aslili de buddy. Should give them buddy, no interest. That interest paid is also financing. How much? 10,000. Everything's done. What do we have at the end? Balance carried on 1,04,000. We need to get 1,04,000 as closing balance. Shall we check? Take the total and identify net cash flow from operating activities. How much is net cash flow from operating? 140, 175, 50, minus 120, minus 157, minus 75, minus 30. Negative 17,000. There is net cash outflow from operating activity. There is net cash outflow from operating activity. How about investing? 30 plus 131 minus 25. 6,000 positive. There is cash flowing in to the extent of 6. Financing activities 1 lakh minus 85. 15,000 positive. Take your calculator. Do minus 17 plus 6. You get minus 11 plus 15 plus 1 lakh. Yay! Closing cash and cash equivalent is 1 lakh. What we did now is called direct approach. What is it called? Directly we hit the cash book and from there we prepared cash flows. This is one of the approaches to prepare cash flow statement. This is not the only approach. There is another approach called indirect approach. Another approach called indirect approach is what we are going to do next. But before that, I want you to copy this and ask me if you have any doubt. Did everyone finish copying? So this is direct method, what we did now. Indirect approach we'll learn in the next class. Direct approach and indirect approach are slightly similar, but in their own way they are slightly different. When we start tomorrow's class, I'll tell you the difference between direct and indirect. Where is it different? How is it different? When do we apply direct method? When do we apply indirect method? And others. Is that okay? Shall we wind it up for the day? You guys learned something new today. You guys have a little fun today. Remember, life is not a battle to be struggling. It's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys stop learning something, you're having fun. Trust me, you might start struggling because you might be in a battle. The thumb rule to stay happy is pretty simple. It's to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? Are we in the game? Come on, at the top of your voice. Are we in the game? That's it, guys. Tada, bye-bye. Take care. See you all tomorrow. Till then, have a great time. Bye.